Hi and welcome to the Invested Chartered Accountant. This is now my sixth video, and for my sixth one I thought I'd do something a little bit different and focus just in on one company, and that company it's either called Greggs here in the UK or from some of our American and Canadian friends, GR but let's be honest, it's called Greggs. Now Greggs is a well-known, well-established UK company that is based on a lot of high streets and increasingly in areas of travel where they provide freshly prepared food at very competitive prices. So being on the high street, being in the food industry, competing with the likes of McDonald's and KFC, it's a competitive market, margins are tight. So why am I doing this video? Why am I talking about Greggs? Well, the key here is whether anyone considers Greggs to be a very good investment, even in the short term, where their current price, as you can see there, is sitting at £16.23, and where it has lost already year to date £11.87. So it's already down 42% in year. Now, is this the right time to buy Greggs? This is what I'm looking to discuss. Now, before I open up with any thoughts and opinions, please take it as noting this is just my opinion. It is just one of lots and lots of opinions. And the key thing here is you do your own research, you consider your own portfolios and what your investment needs are. This is just my own personal opinion based on the information that I can see and my gut feel, and let's be honest, it's pretty much a lot of it is gut feel about where I think Greggs will go over the next few months. So let's get into it. So as I already said, it opened up at around £28, steady rise before a huge drop going down here at £21. Now the reason behind that drop is, as I've already explained, Greggs is in a very competitive UK market, namely on the high street. So profit margins are tight. Now, what's happening in the UK, not dissimilar to America, is there is still high concerns on the level of inflation, which is still too high. And in the UK, from April 2025, there was an increase in the tax on companies who employ people on something called national insurance. So the employer's national insurance increase, making the cost of employing every single person more expensive to the company to raise additional funds for the UK government. Now, both of those cost pressures are pretty much the drivers behind the fall from 28 to 21. Greggs has got a good history of offsetting large cost increases, but as you can see, the market didn't quite feel as confident of Greggs being able to offset both inflation and national insurance, and the fear of uplifting prices in a competitive market would lead to decreasing sales, or if you're going to maintain your prices and your costs are increasing, then you're going to lose profit. So those are the key concerns of driving that one down. From there on in, that £21 has stayed relatively stable. Now, like all shares, during this sort of late March to May period, it's impacted by the wonderful things that Donald Trump was doing with the tariffs, messing up the markets and causing a lot of carnage. So if we ignore that period and go straight into June period, into July, you can see it's sort of on a decreasing scale, but it's sort of around the 21 to then £20 range. Then in July, Greggs reported its half-year position. Sales has gone up from 96 billion to 103 billion. So that's a good increase in revenue. But there was a sting in the tail when Greggs have come out and said they think the profits are going to be modestly below 2024. Now, it depends what you mean by modest. And therefore, what happened straight away was a huge swing out of Greggs shares, sending them down to just below 17. So, it's gone down from £20 to just below 17, of which it hasn't really recovered from there. There's been a further dip it's easier if I show it here. There's been a further dip down here where it went below even £16. And then what we've been seeing for Greggs is pretty much it's been shorted. So people have taken advantage and taken it up, then shorten it back down. And so you can see it's just on a bit of a roller coaster to where we are, sort of estimated close at 16.23. Now, the analysts at the moment still have Greggs coming in at an average of a target price of about £21. So that's a good significant uplift from the current £16.23. So lots of potential upside. The range is anywhere between £13 on the lower end to £30 on the higher. 20 to 21 still feels about right to me personally. So I see Greggs as having significant upside still. When they can achieve that, that's a sort of question mark. I don't know what people's needs are in terms of how quickly they would want Greggs to pay out, but I kind of think there's value in there. And in a future video, you'll see I have made additional purchases into Greggs at a sub £16 price level to really take advantage of what I think are undervalued stock within Greggs at the moment. Now, in the meantime, the other thing to call out on the Greggs is it's got a 19p per share dividend coming through, which goes through in early September. So I'm quite happy to take the 19p. And it's and that's an interim dividend, and the main dividend and the final dividend has increased from 44p to 46 to 50p. So I think anywhere between the 40-50p sort of May time when it gets paid off next year would also be very, very welcomed. So the dividend payment is good. The upside in the capital side in terms of the share price going up is good. I see it, therefore, as a very good buy. I've put my money where my mouth is, and you'll see that in the next video that I've gone in and bought Greggs shares to take my very small amount that I have in my portfolio, which is now over in terms of Gregg-related shares. But I've got good confidence this is going to be a good outcome for the portfolio. And obviously I will disinvest in Greggs when it hits around the 21 range. But I'll still keep some shares because I think it's a very good dividend payer. So I think this is a good stock. Feel free to put your comments, whether you're looking to buy or have you recently sold. What do you think? Is there better stocks to buy? More than happy to see and have a chat around people's opinions. And if you like this video and you want to see how my own very small portfolio is doing, feel free to check out my other videos. And I hope to see you very soon.